not all fintech is created equal. And that's not just about those who believe in standards and those who don't, but there's multiple categories, and within those categories, there's multiple categories. And so really bifurcating sort of who we are and what we're trying to accomplish is so important. And so therefore, at AFC, we started to think about really hard about how we engage regulatory technology companies to broaden our horizon on the regulatory technology. And so we're telling a more fulsome, wholesome story about the entire ecosystem of fintech. And with that, I'm excited to bring up Peter Renton, who needs no introduction, the founder of Lendit and FinTech Nexus. Excited to have Peter, who's a superstar in his own right, to moderate our next conversation on regulatory modernization.
Okay, thank you very much, Phil. You're too kind. Peter Renton, I am the chairman I was the chairman and co-founder of FinTech Nexus. I still haven't got used to not saying that anymore. I am the CEO and founder of Renton & Co., a consulting company. And I think this panel, I think, is going to be really interesting. And I am curious why the title of this panel, as you see on the screen over there, Regulatory Modernization at Pace with Consumer Financial Innovation. So that implies to me that it is at pace. And I would argue that that may not be the case. And we're going to explore how we can help make that the case in this session. So with that, let's just start with some quick introductions. I'll just go down the line here. Ed.
Good morning. My name's Ed Vincent. I'm the CEO of SonarAI Watchtower. We are an enterprise risk management platform used mostly by small to mid-sized community banks. And we began in the reg tech space right about 10 years ago. So we've seen the modernization or lack thereof for some time.
Neha.
Hi everyone. I'm Neha Narkhede. I'm co-founder and CEO at Oscilar. Oscilar is an AI risk decisioning platform that helps banks, fintechs, credit unions, and digital organizations with onboarding credit, fraud, and compliance risks. Really excited to be here.
Hi guys, Ravi Loganathan, president and co-founder of Sonar. Sonar is an industry utility that brings banks and fintechs together to fight fraud. So under both 314B, under the Patriot Act, as well as GLBA, we facilitate fraud and risk information sharing across banks and fintechs. So I look forward to this conversation.
Okay, so let's go right into it. Ravi, I'm going to start with you. Why don't you give us a sense from your perspective, what is the current state of regulatory innovation today?
Well, yes, talk about a massive loaded question, but yes.
We've got to be kind too.
Yes, we have to be kind, right? So when you kind of look here in the United States, we are very much in a decentralized regulatory framework, right? So we have federal agencies, state agencies, each partaking in different aspects of oversight. And in that decentralized framework, comparing that back, let's say, to Europe, which is more harmonized, it's more managed by single directive from the EU's. In a decentralized framework, I think the onus is back on the participants in financial services in particular to proactively engage across all constituents. To give you kind of a framework of how we approached it at Sonar, one of the first, as we are positioned as an industry utility to share information, we started the regulatory process with Vincent. And that was, again, a long-standing process that we went through in bringing them up to speed to get 314B designation. Then along the way, we brought in the supervisory teams, both at the OCC and CFPB, to, again, proactively share information. Then along the way in that process, we also brought in the Federal Reserve, and specifically the Federal Reserve Bank of Boston, given Sonar is positioned as a critical infrastructure across all payment rails to facilitate that fraud and risk information sharing. So again, in a highly decentralized framework that we are in, it requires active engagement. The regulatory landscape is certainly evolving. There's some interesting innovations taking place at the state level. If you take a look at Utah or Arizona, for example, at the state level regulators, There are more forward-looking, particularly, let's say, Utah, for instance, actively engage in the digital asset side of and decentralized finance side of it, where they're enabling partnership and collaboration through their sandbox. So in a decentralized framework, to answer your question, the regulatory landscape is evolving, but evolving in fits and starts, both at the federal and state level. And again, it requires active engagement from participants to kind of facilitate that evolution.
Okay, so on that, Neha, I want to turn to you and talk about engaging proactively with regulators, as Ravi just mentioned there. And you talked about doing it during product development. Can you maybe give some color to that particular piece and some success stories, best practices, that sort of thing?
Yeah, absolutely. So with my experience growing Oscilar and working with banks and fintechs, especially in the risk management space, I see three key principles. One is early transparency. We have found a lot of success engaging with regulators during the process of development of, say, AI models, where we transparently share our approach to model governance, testing methodologies, explainability frameworks. So early transparency is really key. I think second thing is demonstrating controls, right? When institutions demonstrate, proper oversight, controls, that builds trust with the regulators. And so that is really important, I think, as a second dimension. And third, I think most important, as regulatory environment shifts, I think an ongoing dialogue is really important between institutions and regulators, where you can meet and discuss what are the emerging risks, what are the changes in regulatory requirements, and as well as inform them on what are the innovations happening in the technology world. That is really, I think, from a success perspective, treating regulators as partners in the innovation process rather than obstacles to overcome is something I've seen a lot of success in.
And so, Ed, I mean, you mentioned on our call we had the other day that it's not just the federal side, obviously the states. How are you maybe engaging with the state regulators? And I think you talked about one initiative that you were doing specifically. Tell us a little bit about that.
Yeah, Ravi, you made a great point, right, where you talked about the two different levels here. And I think when we think about regulatory modernization, right, we immediately think of the OCC's and Fed's teams in particular, at least in the risk management space, where they're really trying to look at novel activities and engage with financial institutions. But interestingly, if you rewind the clock a little bit, one of the initiatives that we are familiar with in the enterprise risk management space is something that was pioneered 40 years ago by a state regulator, where they initiated a program where they wanted to essentially bridge the gap between on-site visits of their examiners going out to meet with their state-chartered institutions. And the idea was that between those 2-year periods, let's get the information flowing back and forth between the regulator and the institution, and with the goal of essentially getting ahead of issues before they became significant. And so, that was an example of a program that was initiated in a state. It was a voluntary program. It continues to this day. They have 90% participation of state-chartered institutions in their state that share this information. And by all accounts, you have people who just have a presence in that state that want to participate, even if they're not necessarily chartered in that state. So I think that there's an opportunity to look beyond just the federal landscape. That is a voluntary program. There's about 70 banks in that state that participate. There's another example of a state whereas they instituted a mandatory program. But in each of those instances, the goal is to facilitate more information flow. And so we believe that there is an opportunity to bring technology to bear in those situations, right? And so while the concepts are not necessarily new, the way that they are enacted could certainly be brought forward, I'll say, into the 20th, if not the 21st century. And so the idea being that we could leverage technology, we could make it more efficient to collect that information, to share it in a secure manner, and ultimately to create reports and analytics on the back end of that not only help the regulators understand and consume and analyze that information, but also the institutions themselves, so they can use it when they are presenting to their boards, with their risk committees, and so on and so forth. So I think there's an opportunity, Peter, for us to look beyond the federal landscape into some of these instances where states have pushed the envelope a little bit. And so we're looking at taking those couple of programs I mentioned and enacting those in other states beyond just those two. So we think there's an opportunity to scale that out.
Interesting. That's really interesting. So, well, let's move back to the federal government, and we just heard Senator Rounds earlier talk about his priorities, new administration with Republican control of all three parts of Congress. We have, obviously there's going to be changes, but I'm curious about what you guys think about what changes this will have when it comes to regulatory modernization. So I'll open it up to any of you to tackle that one.
I'll start. I think if you want to observe kind of a macro trend here, is certainly it's not going to be status quo. It's going to be disruption. So if you take that basic principle of disruption and apply it to the regulatory agencies and framework, I think there is going to be, one of the things we can look forward to is further simplification of existing regulatory standards. One of the things, at least from on the fintech side of the house, we certainly are looking for further transparency in terms of, what's in and what's out. So the hope here is that at least at a federal level, there is further simplification of standards and rules. And then how do you then tie that back to the state level? Because there is quite a bit of fragmentation on the state level as well. So I think the good news as we kind of observe how the transition is taking place to the new administration, it's certainly not going to be status quo. And then if it's not going to be status quo, what we can hope, based on all the feedback we have given over the last couple of years, it's definitely going to be, our hope here is that there's going to be further simplification of rules and standards and more consistency across the different federal agencies. And then what we need to kind of better understand is how is that going to translate at a state level, given we have this decentralized approach with both federal and state levels. So that's a conversation I think we all look forward to, and hopefully we'll see more clarity as this conversation moves forward.
And as a complementary perspective to what Ravi just said is, while political shifts might happen, I see some core tenets in compliance modernization that will transcend these political cycles, right? So first is consumer protection will continue to be paramount. I think, these technologies that are new, let's say AI in general, will require the same kind of governance, model governance, visibility, audit trails, focus. So that is one thing I think is here to stay. The second is operational resilience and real-time monitoring. I think we need, more modernization around, moving to complete oversight to continuous monitoring rather than, kind of disparate manual reviews when asked and pushed by regulators. And the third that I agree with you, Ravi, on is standardized best practices. Rather than having, one-off compliance frameworks, we're going to move towards some sort of standardization where, it will be easier for institutions to implement consistent compliance programs. So really, I think, consumer protection, operational resilience, real-time oversight is probably here to stay.
Yeah, I think that the standards concept is a really important one. We certainly think about that from an enterprise risk management perspective as well. And right, those two states I mentioned, they have a set of key risk indicators that everyone looks at on a consistent basis. And And by having a set of standards, I think we talked about this in one of the working group sessions yesterday, it puts you in a position to then educate the folks on the other side of the table and have a consistent language that you're speaking. So, right, we see turnover in regulatory agencies, and you have new folks coming in. It's a lot to learn if it's a blank sheet of paper, but if you've got a set of standards that you're starting from, it also then puts you in a position, I think, to get to a common language more quickly.
So is that education, do you think it's improving? I'm just curious about how we obviously have a new administration, there's going to be a lot of change. Do we have a solid base that we don't have to start from scratch again?
I'm not sure I'd say we have a solid base. I mean, I think that Senator Rounds made the comment where he said that right, really you need clarity to start, right? And I think that there's a lot of opaqueness, right? Ian Maloney chaired the working group that just put out the 30-page response to the RFI from the joint agencies around bank and fintech partnerships. Right, there's a huge amount of content there to be consumed. That's a great starting point to build that foundation. But just the fact that the folks from the Fed team came in yesterday and said the reason we asked for that is because we don't have that strong foundation yet. They were a little bit more opaque in their terminology there, but right, they are still trying to build that foundation. So I think we still have work to do to put that in place.
Right. So we've talked about the need to move to real time. Obviously, we've got a lot of agencies that are still working with systems created in the 20th century that are on a quarterly cadence. What are some of the lessons maybe we can learn from what hasn't worked? I mean, what can we learn from sort of the past obstacles to modernization?
I'm happy to jump in. I think that first and foremost, it's inertia, right? People are used to doing things the way they're doing them, so there's a cultural aspect. The secondly is there's a technology aspect that right, again, the world we live in, people live off of call report data, which is filed quarterly, and it's dated, and it's just the status quo, but yet you can get information out of systems on a real-time basis, but it's work to do that, and you need to put the technology systems in place. So I think that it's a combination of cultural and really the tone from the top and setting that tone, and then secondly, leaning into the technology, which is certainly there, right? Everyone in this room, right, by definition, right, we're on the forefront of that. So the technology's there, people just need to lean into it.
I also think that the way to build trust here is through transparency. The previous compliance frameworks were pretty opaque in nature, so making any changes to that, whether it is embedding real-time monitoring or including the right AI models, if there is more transparency around strong audit trails, strong model governance frameworks, that is one way to build that trust is through transparency on how exactly things work, opening this black box. I think that's really important, a lesson that we have learned. The second is really fragmentation, right? Today, the compliance stack is extremely fragmented. There are multiple unique systems. There are data silos. And really, the lesson is how do we move away from fragmentation to a more unified platform where there's consistency in establishing these controls, consistency in establishing oversight at the right level when needed, on demand or in real time.
Just to add to some of the comments, I mean, we are at an interesting place where the pendulum is shifting to automation, real-time frameworks. There's also the entrance of AI that is beginning to automate some of the compliance and risk processes. I think there's a cautionary note in that regard where I think you still need a consistent framework, a culture of compliance within the organization such that we don't completely swing the pendulum to full automation without having those critical components of a culture of compliance, the frameworks in place, the controls in place, the training in place. I agree with my fellow panelists that yes, particularly on the AI side and compliance operation, fraud operations, risk management operations, there is now tooling that is emerging that is going to rapidly speed up some of the manual processes and simplify those and automate those. But I would also caution that implementing such all-in-one decisioning tools without the appropriate controls, without the appropriate compliance culture within the organization, without the training, without the management team and the board buy-in, I think we are going to probably run into situations where things will get out of control from a risk mitigation standpoint. So exciting in the compliance and risk and fraud management space that we are indeed going down the path of next generation of technologies. But then I think there's also, we want to do that with the appropriate guardrails in place, namely the compliance culture that you need throughout the organization to implement such advanced tooling and solution sets.
Okay, so then I want to talk specifically about the AFC. Okay, we're all here, we're all members of the AFC. We're all here because they've done a phenomenal job of expanding the umbrella of membership. It's grown tremendously over the last year. What do you see, from your perspective, is the role of the AFC in really helping to further regulatory monetization?
I think
modernization, not monetization.
I think there are about 2 or 3 things. One that I really like is structured dialogue, right? Rather than institutions, engaging separately, institutions like AFC really create more of a structured dialogue on sharing emerging risks, sharing information on emerging technologies, and really building that trust both ways. The second is standardizing best practices. This is a fast evolving space. The change is big, as Ravi mentioned. And really AFC, or like an organization like AFC, is really helping bring that industry together so everyone can move in the right direction a little more efficiently than you would if you were doing this individually. And I think third and the most important thing is a unified voice for responsible innovation, right? When institutions consistently have a commitment and demonstrate that commitment to responsible innovation, to compliance, to consumer protection, I think that is what will bring the industry and regulators together. So really that kind of dialogue, standardization, responsible innovation are a couple of things I see the way AFC is going to help the whole industry move forward.
I think to add to that, now more than ever, both on the technology side and how there is rapid advancement on the technology side, plus the uncertainty both on the policy side and the regulatory side of things, forums such as AFC is going to be vital to bring all constituents, and the key phrase is all constituents, around the table to continue this dialogue. I think it's absolutely vital. And then, as we continue to develop, I think the point around standards is going to be paramount. But I can't think of a time where you need such an organization such as an AFC, given all the elements that are in play today.
Okay, well, we are out of time on our clock here, so thank you very much, panel. Give them all a big hand.